Coming up in 714 Method Tour.
The market is gonna do this. If it's gonna move sideways, here's what you should do. Just draw a small range around that time. Right now, what I'm teaching you is to take one trade at a time, one trade a day. You only have one job, to trade once a day. M5, I'm gonna use M5 so that the moves are massive, so it can be much obvious. Because on M15, it ends up being a small chart. Okay, I think I'm gonna start here. So this is what you are going to do tonight and tomorrow, practically. So on your chart, you look at where my mouse is. Can you see it? Where's my mouse? Right there on top, you have a tool that says vertical line. If you don't see it, you'll still watch one of my videos. You'll watch the session on YouTube. So you mark from 2 p.m., right? 2 p.m. to 3 p.m. Where's 3? Right over there, okay? So 2 to 3, basically here, as you can see, the market is just stagnant. It wasn't moving. It was just consolidating. So you mark the opening price. Since this candlestick is bullish, which means the opening price, it's below. Draw your line out like that. Paste it out. So here we had a consolidation where this was an obvious sell, small buy. This was even just one candlestick. I think that's a doji, looking from a larger time frame. And then after 3 p.m., we had a slight rise and then a drop in the market. Okay, but looking at this, it was already on a continuation to go down. So it's not as clear. But if the market is gonna do this, if it's gonna move sideways, here's what you should do. Just draw a small range around that time. Draw a small range like this. What the market is gonna do, it's going to consolidate, range, rise, and then drop. That's how most of the time it will move. Let me depict this. So if the market is in a consolidation, because I know the call is coming, oh, Masha, it's consolidating. I don't know what to do. Okay, so when the market is in a consolidation, it's gonna do this. Track, right? Break up and then drop, right? But if sometimes it will do this, track, drop, rise. It's a square root. It's gonna do a square root. If you did math literacy, then you don't know what that is. Yeah, well. So it's gonna move like that. The only way to correct me is for you to go into the chart and find out. Okay? So moving forward to the next day. Right now, what I'm teaching you is to take one trade at a time, one trade a day. You only have one job, to trade once a day. But once you're in mentorship, you get to understand like there's many trading options. Okay, so looking here, so all of the people, I think you heard about the people who are raising hand here, they understood this and that's how they're making money. No mentorship, no nothing. So you can do the same. So over here, it was already 2 o'clock and the market just moved. So this one was very off. Very off. Okay, so this one, just a continuation, 2, For this one to be understood, I need to go to a hard time frame, but I'm not going to do that now because I'm still trying to teach what I'm saying right now to make it easy. So we're going to move to the next day. Next day, 2 p.m., 2 to 3, like this. So over here, as you can see, we had a market that's opened when short, but an obvious trend was this buy here in between, which led to afterwards dropping. So the sell here was over there. Why am I drawing it on top? Because the candlestick was bearish. So if the candlestick is bearish, we use the highest price or the high of the candlestick. But if the market is bullish, we use the bottom of it. So if you check here, we had an opening price here. Market came down, went up to retest on that price, and then it continued down within that time. I think that was the last example that I did there. But if you check on the entire structure, basically, we had a market that opened here, an obvious buy. So afterwards, 3 p.m., it just continued to sell, right? So it provided what you expect. So moving forward. So as you do this, that's how you collect your evidence, looking at what the market is doing every day, exactly on this specific hour. And then what is this? This is US30. After this, we'll go to gold. Okay, so over here, again, we had an opening price here. Opening price, market went up, opted to retest inside, but then later just continued to go up. So this one could have been a loss, I'll be honest, because if you check here, we had a market that was going up, and after this, after 3 p.m., we're expecting it to drop. So basically what the market did is it went for a stop loss if you had it, because that range was very hard. So it went up and then dropped later. So a complete loss, an obvious loss. I'm not going to try to supplement what is happening and all that. This is a loss because it didn't do what we want to see. Simple as that. Okay, another day. Two p.m., 3 p.m. over there. We had the market that was dropping. Afterwards, we expect a buy. It did what? It bought a little, went down for the stops, and then it went up. See how unfair the market was? That's why most people have losses this week. So it did the movement. Whereas here, this is what you expected. But then it started way down, and then later continued to go up. So if we gonna come to what I said later, earlier, I mean not later. Okay, let me resume without contradicting. So also over here, we had 3 p.m. Market was dropping in hopes it buys, but it started way down and then later reversed. You see how it's been moving the past week? And I did explain this when I was trading live. Like, this is what will happen this week. Just check for these things. And another thing that I cannot do, let's say, as I'm teaching, it's hard for me to go a bit deeper because here we have people who are already familiar with trading, so they're easy to understand and reason. We have people who are here for the first time. So if I go deeper, it will be very much confusing for them because I don't want you to ever look at this and say, this is hard, this is not for me, I cannot do this, and then you end up giving up, right? So the practical examples of this, it continues, as you see, happen later on to the following day. But I will give you much better example of how this is working. And as you see here, I'm only doing a realistic chart of what happened last week. Because if I wanted to be perfect, I would have already had slides with the perfect setups and show you the perfection of it and say, this is how it is, this is how it is. And then when you go home, you see what I see here, and it doesn't make sense. You're like, this is not it. He's taught us something else, and something else is happening in the charts. So that's why I believe in doing it on the actual charts. So even when you go practical, you know exactly what to do or how to use it. Okay? So on this day here, here you could have caught a few pips. There we had a market coming up, and then it's dropped. This wasn't much. You couldn't blow your account here. Okay, that was 100 pips, 200 pips actually. So here, a win at last. This was Friday. This was Friday's trade. Okay, so let's go for gold and see how did gold do. What we were doing was US 30. So now we are only going to be monitoring on gold, 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 gold. Where did it start? Okay, so there we had the price at 2 p.m., the opening price, to 3, market window. So we had an opening price here. So the market was dropping, then later came back up, tried to retest on the opening price, of which I've been talking about, but it did not go all the way through. And then it's continued to go down, right? That's one case. It's continued to go down. So moving forward, on another example, also here, we had a market that was buying from there. It went up, back down, retested on the opening price, and then it's continued to go up. That's on gold. Okay, we had an opening price, markets went up, came back to exactly the opening price. Remember when I said in the session, like sometimes it will touch by a candlestick, sometimes it will leave the tails. So it came back with the tails, and then it did the touching, and then it started to move away. Okay, there's your 50 pips. To the people who didn't understand when I spoke of pips, if you're gonna use the rectangle and you drag it like this, if the number there on top or at the bottom says 500, that's 50 pips. So which means a volume of this much, it's worth 50 pips. So pips times by pip value, and then the price, that's how you get how much you're making on the trade. If you're gonna use 0.01 on 50 pips, you'll make 100 rands per trade. So if you're gonna use 0.10 on 50 pips move, you're gonna make 1,000. So depending on your lot size volume, same movement, but you're making a lot of money. So if you have a lot of money, if you have a lot of money and then you just go here and say, okay, now I see it's doing, you buy here, and then you wait 50 pips, you're making a lot of money. You see, you don't have to wait the whole day for a long trend for the market to continue saying you want to see a series of candlesticks like this so you can take a screenshot. We're here to make money, not to take screenshots. And when you make money, you withdraw it, you keep it in your bank. Because when some people they trade and their account is growing, they make a lot of money, they end up being emotional. Now you taking an account from 1,000, it's on 20,000. Now you're barcoding. Don't do that because you know you've just made a big win. Withdraw, start back from 1,000. Don't go all in and say, okay, now I'm close to 100,000. I'm close. No, don't do that. Leave that to us. Okay. So after that, that's 50 pips movement. So that is how basically I calculate my 50 pips everywhere. If you check here, there's 50 pips, there's 50 pips, there's 50 pips. So it's easy to get a 50 pips range on gold, whether going up or down. Very much easier. Okay, so moving forward, another example. Okay, another example here. We had 2 p.m. market opened, started to drop. That was the opening price here. Paste. You see how it did. It opened, stayed around there. It went up afterwards. This was a very clear sell actually. Because if you check here from the opening price, we had 2 big bearish candlesticks. Only after it went up and then retested on the opening price and then continued. So if you're looking for 50 pips, you got it here. Right before it's reversed. So if I say trade 50 pips, not structures, because this thing of wanting, the reason why I also hate trend lines, it's because when you're trading trend lines, you're always expecting an expansion. If you buy, you want to see a buy, break, retest, and then forever. You see, but when you're trading like this, you have a target like 50 pips each and every trade, 50 pips every trade. That is easier for you to actually lock in and make money. It's easier. Okay, so just with this basic practice, this is 10. That's what I look for every day. There's nothing that I'm hiding and saying, no, I'm putting this, then I'm using something else. There isn't that. Okay, we had a drop here, opening at 2, a drop, and then the market just opened, and then it went up. So from here, looking for 50 pips. Oh, that's too high. 50 pips was over here. You see, so these 50 pips may look small, but if you're gonna put, maybe let's say using a standard lot, same movement, standard lot, you're making about 5,000 per trade. You're done for the day. You don't have to stay long. And taking these consistent small wins, it keeps you motivated over time. Because you win today, you win tomorrow, you win the following day, you win that day after, and you're ahead of your game. 5,000 a week, that's reasonable. You can make 20,000 in a week. That's into if you do everything accordingly and you don't stress yourself, you don't rush yourself. Okay? So you need to do all of this back testing. On Monday, because the markets will be live, you will be doing forward testing. Every day at 2, you want to see, is this going to do what Marshall said? Is this going to do what Marshall showed us? That's what you're just waiting for. To prove me wrong by doing what I say. You don't take money and deposits unnecessarily. There's no need for you to make unnecessary losses. Go to your MT4, open a demo account, do the practices, and follow up. So you're checking the steady growth and the steady trades of how it works, and then you see how did you recognize it during the course of the week. That is how you can have an actual figure. You don't ask me what's this. You don't ask me about the win rate. So what's the win risk ratio? I don't know. I'm just there to make money. I don't do calculated. You want me to say 100%? And then screenshot and say, Masha said it's 100%. No, that's not how I work. Do it, see for yourself. That's all that matters. Okay, you do it, you do the study, and then you make a follow-up. It makes it easier. Wait, sell, buy. But most importantly, I wish for you to study these reversals. Because see here, Each and every time it's going to do an immediate reversal, it will go back exactly on that opening price, no other price. Okay? There is more specific things I wish to teach, but I don't want to bore you also. I'm about to say ahamba lapho futhi. So we had a drop back in that price exactly, and then just drops. So you can only figure these things when you are consistent with practicing. Basically, if you check, I've only taught you two things. Then obvious buy and obvious sell, an immediate reversal for buy and immediate reversal for sell. Those are the two most common patterns that you will see every day in your chart. And overall, you make money. Trust me in that one. I don't do much. Yeah, well, I can teach you. I can teach you other blocks. I can teach you liquidity and all that. But I want you to focus on the simplicity at first. Get the understanding. See it work out, and then later we can start putting makeup and say, okay, right now we can use this. We can also use this. We can use this. It is right now. It's easy for me to do that. But I want you to see that even without those things, you can still make money in the market with the simplest movements. Trust me on that one. Any questions? At the back, question, Mike. Where's the mic? Tawan. Mike. Nalala. Mbambe. Okay? Most importantly,
So Mike, that's how I'm going put on it. Choose this one. And then first.
Sanibona. Igama lami ngulindano kamjado. Mashaya. Nyamboza. No kahle kahle umbuzo wami ula kade ukhona. La kade ukhona kade analyze khona ekuqaleni. Yeah. Sacela ukubuza ukuthi laphana between u2 no 3 ukube bekune favor gap between u2 no 3 bizo reversela kuphi kwi opening price noma kwi favor gap.
the opening price, I'm saying this is like book. It's obvious there. The price, it gap is just there. So it's something that happens by chance. But when it comes to price, it's going to do that exact thing. So it gap, as you see there, there's no gap.
Okay, ukube bikhona.
I don't know, because
Okay, I guess
I can't speak on maybe.
Yeah, bro.
I'm talking on what's there. Makes it easy. Maybe singazama ukuthola i-setup enayo. But that's going to confuse a lot of people because now I will have to do another series of study for that. So here's a typical example. If you check for this one, we had the market that was going up, and then we had a gap here. Now a gap here. So it's reacted exactly on that gap. So when we're checking the one for time, so if you're checking the one for time, you can see the market was like steady, respecting that price, but then it went to your gap and then later it's dropped. Yeah, well, there was no precision on the side, only on the left-hand side where you were seeing the index of price action. Then later it's continued. Maybe I think up to somewhere later here. Yeah, well, but now it wasn't as much. So yeah, any other questions? Yes.
Andalona.
No, stand up.
Usiyandalona ongalapha kwadlangezo. Funda khona kodwa ekhaya senuthu. Ukubuza ukuthi sibuyela nini ku1 no2
Next month.
ngeyingaki mhlawumbe.
Yeah, so her question is, Basically, it's the 714 method. You wait 7 hours a day to trade at 1 p.m. 4 candlesticks should be enough to make $1 million. So her question is, when are we going back to 1 p.m.? Because right now I'm teaching people to trade at 2. So from April, it's daylight savings in New York, so it's still winter. So once they back to summer or what are other seasons, then the market will also go back to the normal time. I will also say it in my group chats once it's back online. That's why you need to constantly follow up and make sure that you're in my Telegram channel. Mostly Telegram channel, because TikTok, they can ban me anytime. I can report to you guys. They're like, oh, this guy is ugly, and then they ban me. So I don't know how it happens. So you need to be in that community, because that's where I say, okay, right now we are back to our normal trading times, and then we're able to trade from there. So what we're doing right now, we'll be doing it from 1 to 2 p.m. during the day. Okay? More banks. More banks. Questions? More questions? It means I'm a good teacher. Eh? I finished teaching with no questions. Ask your question. I'm here because now I'm not always going to be here. You'll inbox me later and say, no, Masha, there was this part where you say, I was like, no, I'm done. It's just like when people see me around, as I said earlier on. You see me walking around here in town, and then you start asking me questions about Forex. No, I'm just there for whatever I'm here for.